I'm going to start here, which is now the introduction of it. And SMEs are the backbone of Kenya's economy, hence my focus on SMEs. Yet many are either overburdened by taxes or completely unprepared. If you ask a lot of people like about tax, it will either be, I'm too small for tax, or honestly, I don't know what I'm meant to do with taxes, or the other version of it, who know about taxes, but it's because someone told them you have to register for taxes so that you look like a legit business, or just a lot of misinformation goes on around it. And the most unfortunate thing is that we don't have, what is it called? Good knowledge or someone who can guide us through this process. But that is the gap that I am feeling through her legacy. So this session is meant to help you see both sides, which is the challenge you must navigate and the opportunities that you can leverage when you're being tax compliant. I hope we are clear so far. So we can start with, again, tax compliance isn't just about avoiding penalties, which most people like. If you ask someone today, what's the idea, your idea behind tax compliance? It always seems to be, oh, sitaki KRA wanikujie. And that is such a one way of looking at it, which honestly is very misleading, because I feel like people have this avoidant or toxic relationship with KRA, if we can call it, where it's just fear. And in the sense of that, people end up missing a lot on opportunities where taxes don't have to be something crazy for you. So I tend to believe that tax is actually a mindset, because it's part of how you build a business that lasts. You find that a tax compliant business never has to pause and ask, what if KRA catches up with me when I expand? And this is something that you'll realize when you interact with small businesses or just someone who's in the process of growth, and they're like, hey, I'm thinking about this, but man, I'm really afraid that if I go to step X, I'll get in KRA's radar. Or if I go to step Y, I'll get into KRA's radar from this angle of it. And my idea behind it is that fear alone holds back so many brilliant growth-ready businesses. But the thing is, compliance is a habit. I genuinely feel that, you know how everything else is a habit, let's say saving. He always told, if today you can be able to save, like, let's say 5% of 1,000, it will be easier for you to save like 5% of 1,000,000, 5% of 10 million, and such like that. There are these things that are basically habits that you create. And as much as tax is something that's mandatory, unfortunately, it's something that we have to cultivate. If you start to build a tax compliant today from day one, then I genuinely believe when you get into like 3 years in, 4 years in, or maybe you have 5 employees, 10 employees, and then your business has gone from the level where it wasn't compliant and it wasn't like vatable, and then now it's vatable, it becomes easier, because as you grow your business, then you notice that you're expected more in terms of taxes. A business today that's doing 1 million in revenue annually will, let's say, have a lesser tax liability to pay than a business paying 5 million or 10 million or 20 million. And so I believe it's easier. Like, instead of someone coming to you and telling you, we're expecting 30% of tax from your revenue. That's a bad example, but let me use revenue in this case scenario just to make my point. From your revenue of 20 million, someone, it will be like, that is so much money. But you see, if you had started when you are at even, let's say, 500,000 or 1 million, then it becomes so much easier, because you know at every particular point that you're growing. So at 1 million, you're paying 30% tax. So that was like 300,000. Remember, please don't quote me on this, that you're not taxed on the revenue, you're taxed on profits, but I'll get to that. So it's easier if you started at, let's say, even 100,000, you are doing 30% of that, and then your business grew. So because you're also keeping track of your growth, you know, oh, I've grown from 100,000, now I'm doing 500,000. So I know the tax will be more. So you also know, as you're growing, you know your tax obligations are growing as well. So as opposed to going from, let's say, 0 to now you're paying tax in 20 million, if you had a steady habit created throughout the process, then it will be easier for you to comply when you're actually big, which is what most people say, like, oh, I'm too small for taxes. No one is too small for taxes. everyone is meant to pay tax, and paying tax as a startup, as a small business, will make the process easier for you when you're a bigger business. So some of the challenges that I see in tax compliance are, one, the ever-changing tax regulations. And you'll hear this a lot, but this is two sides of it, because there's a part of it where there's some changes happening, but on the basic level of it, you may notice that change doesn't happen per se. So what changes are these, maybe new things being introduced, but at the basics, something like, let's say, VAT, the rate of VAT hasn't changed, the threshold for VAT hasn't changed, or let's say pay as you earn, that hasn't changed. So in terms of the basics, actually, if you have a good understanding of it, or if you set up the right way from the beginning, then you don't have a problem, because you'll notice basics don't change. What changes are things being introduced in the business world. Like, let's say last year they introduced housing levy, which again isn't a tax, but it's combined with KRA, so people assume it's a tax. Or maybe they said now SHIF is part of tax, so there are a lot of terminologies that keep changing that can be confused with tax, which can be confusing, and that presents a challenge to so many people. So the ever-changing regulations, I'll say, what is this word? Authorities, not just tax, but basically everything that affects business. So there's that ever-changing regulations that affect so many businesses. Number two, there's lack of information and guidance when starting. So today you decide to start a business. It's very hard unless you have maybe a consultant or someone who works at KRA to know exactly what kind of taxes are applicable to you. And unfortunately, even if you check KRA, the information is never really, really clear. And so most people start without knowing, or they start and register for the wrong obligations, which just lands them in trouble. Number three, we have perceived burden versus actual liability. Now, this comes back to, there's this narrative where you hear people say the government is constantly coming for our money, and you don't understand why you're just paying more and more each day. But you find that for most people, it's that they've never paid tax at all. And then now, because systems are being introduced and things are getting better, you can no longer avoid tax. So you feel like maybe you're paying more tax than you've been paying. But the problem all along is that you are not paying tax in the first place. But when you actually get a good look at it to see what the actual liability is, you'll notice it's just a matter of you taking the tax aspect of it in consideration when you're building your business, when you're thinking about your profitability, when you're thinking about the pricing of your product. If you were to take the tax element of it into consideration as it should be, then you would know that the burden is not as crazy as is perceived. So the other thing becomes the cost of non-compliance, which is very common for most Kenyans, because today, let's say, you're meant to file returns. You have a KRA PIN, and then you don't file returns. So year 1, year 2, year 3. And then KRA comes and they're like, we need X million from you. And because you are not filing, and maybe you had some liability, it has accrued interest. So you have mountains of debt. That is such a heavy cost of non-compliance, because unfortunately, you will actually have to pay for this, amongst other things. So maybe you want to get funding, and then nowadays, so many of these investors or even banks, they ask for the tax compliance certificate. So you end up missing out on so much because of simply not being compliant. And then you have the element of limited financial literacy and record keeping. In all honesty, I feel like our education system could have done better in terms of giving us financial literacy and even tax education, because you're coming to a world where you get deducted taxes and no one explains to you what this is all about, because you go to campus and I think people who are getting help, you have to get a PIN and no one explains to you the point of the PIN. And then you've finished campus, you're getting a job, and then you're being told you're getting paid 100 SOC, and then you get 70,000 in your account. No one prepared you for that as well. No one prepared you for how to keep books the right way, how to have proper money management skills and financial management skills. So these are some of the things that present a big challenge when it comes to tax compliance for a lot of people. Still with me? Quick hi, anyone?
Yes.
Okay, thank you. And if I'm too fast, please tell me I'm too fast. And if you need me to repeat something, please tell me. I don't mind that, okay? So the next part of it would address is the opportunities in tax compliance. So the opportunities in tax compliance include tax deductions and allowable expenses. This means as much as paying tax is mandatory, it's not a matter of, again, remember when I was telling you at the introduction, like paying tax on $1 million if your revenue is $1 million. In actual sense, you don't get taxed on your revenue because if, let's say, the home fragrance brand, you have to buy the wax that you use to create the candles with, and amongst other things. So if you're keeping your books right, then let's say we see that your revenue was $1 million, but because you're keeping your books right and your records right, I know, or rather, KRA should know that that 1 million is not the money that they should tax because there were expenses that went into it. You maybe, let's say you put them in this beautiful glass or cups that I see with, that's a cost of sale. So when you know and keep proper records of your expenses, then if your revenue was $1 million, you're not going to pay taxes on $1 million. You're going to pay taxes on that $1 million minus all expenses that you incurred. This could be rent, it could be the salaries, it could be the marketing. So when you're well aware of all the tax deductions and allowable expenses, then that's an opportunity for you to be tax compliant without it being expensive, because you'll reduce your tax liability and you'll know the government is not actually coming for your revenue. Because I always hear of that complaint of, oh, now my revenue is going lower because I have to pay X amount on this, but you don't actually pay the amount on the revenue, it's on the profits. So after you've already taken away all your expenses. So if you have, remember when I talked about the financial literacy and tax education part of it, with proper tax education, you know when you're setting up your business that tax is one of the factors that you need to take into consideration as well when you're doing pricing. And so if you end up being compliant, you do not need to lose out on your profits or maybe eat on the costs of running your business. Another opportunity is the current tax amnesty program. And this is so good for those people who, let's say you've been running a business for a while now, and then someone had registered for you a tax obligation and you didn't know, or maybe you did not know, having a PIN or any tax obligation for that matter means that you need to file every period. And so in that process, you ended up incurring some penalties. So tax amnesty basically is a chance for you to clear like that debt. Like let's say if you fail to file company returns each year, you get a penalty of 20,000. If you fail to file personal returns, you get a penalty of 2,000. So if you have penalties for December 2023 and backwards, that's the 10,000. 10,000 are for the monthly obligations, or the 20,000 or 2,000. You get a chance to have them cleared up without you paying that amount. So if, let's say, you had penalties of 5 years as an individual because you filed the returns late or you did not file the returns, so you won't pay the 10,000. Either the moment you update your returns, it will be automatic, or you just pay a shilling for every year. So out of 2,000, you pay a shilling, the 2,000 is cleared. And this applies for the 20,000 and 10,000 as well. So if you got a company and then let's say you registered a company in 2018 or 2019, and then COVID happened and that company did not go through, or just things didn't work, so you've gotten penalties from 2020 up to 2023, you don't have to pay the penalty for not filing your returns. That is covered under amnesty. So the other opportunity in tax compliance would be business sponsoring for tax efficiency. Sorry, guys, just give me a second. Yeah, so it will be business structuring for tax efficiency. What I mean by this is, depending on the business structure that you choose, there are different tax advantages that come in. So business structures are basically, are you a limited company? Are you a sole? I don't like the term sole proprietorship because you can be a limited company when you're a sole proprietor, but a business name, you know how you can just register a business name? In the past, that used to mean sole proprietor, but nowadays you can be a sole proprietor, but with a limited company. So if you register a business name, there are tax implications to it. If you register a limited company, different tax implications and efficiency, and the same thing for partnership, depending on what you choose. But I'm going to address that more on the next slides. So there's that part of increased investor confidence. Right now, or rather in the last couple of years, there's a lot of investors coming to put in money, whether it's like for the people who do the Series A and all that, or even just grants. You can actually not get a grant if you don't have a tax compliance certificate. So imagine how insane it is that you would lose an opportunity for someone to give you kind of like free money, because grant you don't have to pay it back because you are not compliant. So it's actually very important for you to get that corrected and ensure you don't miss out on that opportunity. So welcome to the two people who've joined us a bit late. We're not far gone. Yeah, so how get started? So our three main topics today, or what I was going to cover under the implications and challenges, were structuring, how to structure your business for financial success and long-term growth. We'll also be covering the top tax and compliance mistakes costing small businesses money, and the untapped opportunity hidden in tax compliance. So don't worry, I'm going to share these notes with you as well after the session. But remember, if I'm moving too fast, please let me know, just unmute and let me know. Thank you. So when it comes to structuring your business for tax compliance and growth, it starts at the beginning, where what type of business are you registering? And that's in terms of choosing the right structure, which is what I was just mentioning. So when it comes to the legal aspect of it, you either have one of three options for the legal structure of your business. You can either be a business name, which is what is famously referred to as a sole proprietorship. But ideally, what they mean by a sole proprietorship is that that business that you registered is attached to you. It's not considered different from you, as opposed to like when you register a limited liability company, which is referred to as a natural person. So with a business name, sole proprietorship, your business and you use the same PIN. In case of, like, let's say debt or something of the sort, if you have issues in your business, they can come for personal things because there's no separation between you and the business. So if you had tax debt today, they have a right to come for your things personally. They can, there's this thing where KRA was doing where they were freezing accounts, and they still do today. So with a sole proprietorship, where you and the business are not separated, they can actually freeze your personal accounts because you and the business use the same type of PIN. Come to this other end where we have the limited liability company. A limited liability company is considered a natural person, which means a limited liability company can own land, it can transact on its own, it can basically do everything you as a person can actually do. Hence the limited liability. And then if it can also acquire debt on its own, and just everything that you can do. But because it's a limited liability company, it means there's no part where anything going on with the business can be, like, the consequences can be as you as a person, even if you're the director of the business. So often sole proprietorship are easy and quicker to set up because, let's say in terms of the cost, today for you to register sole proprietorship or rather business name, if you're doing it on your own, it's like 950 shillings, as opposed to if you're doing a limited liability company on your own, it is 10,750. So it's easier because even the documentations that are asked are not a lot. Even like, let's say in terms of operations, when you're like going to open a bank account or something of the sort, the entire process of setting up a business name as opposed to a limited liability company, it feels simpler. But a sole proprietorship offers limited protection against personal liability. All business debts are tied to the owner. So there's no separation of, let's say today, Eunice Nigui and her legacy, if I was a business name, which is now the sole proprietorship. But as a limited liability company, her legacy transact on its own. I transact on my own. The only relationship between me and her legacy is that I'm its director. Otherwise, in terms of, let's say, even loans or debt or liability, like if someone was suing her legacy, they can't be suing me, it cannot come to me. So that's one of the ways that to protect yourself. The other element of business structure is normally a partnership. So a partnership is where it's like there's two of you, and at the same time, you don't want to register a limited liability company, so you opt for a partnership. So in this case, a partnership still has the same challenges, or rather limitations and risk, as a sole proprietorship, because it's basically the same structure. It's only that you're two people now. And what is it called in terms of taxes? So the tax obligations, so you would get a PIN for a partnership, but when it comes to what is taxed and who pays tax, the tax is divided between the business partners. So if you're 2 partners, 3 partners, 4 partners, 5 partners, everything will still go to the individual people. So sole proprietorship and partnerships are basically the same in terms of liability as opposed to a limited company. So it's always best to go to a limited company as well. When you're a limited company, there's some tax advantages that come with that. So if a company owns, like, let's say, a car, in terms of accounting, there's something that's called, like, how assets basically depreciate, have wear and tear. The moment you're a limited company, that can be used to reduce your tax liability the moment you're a company, but as an individual, it doesn't count. So that more advantages as well. Let's say if you invest with your company, the advantages to that, like you get some tax relief because of being a limited company. Hence why it's always told, choosing the right business structure will actually help a lot when it comes to the tax element of it as well. You're paying rent. You see, if you're a limited company and you pay rent, definitely that automatically is a company expense. But if you're a sole proprietor and the invoices come to your business name, which is attached to your KRA PIN, it can be hard to separate. Is that your personal rent or is that business rent? So in terms of taxation, a limited liability company offers you a better chance and more advantages when it comes to the setup. We're good till there? Thumbs up.
Yes.
Yes,
Yes.
from someone. Thank you. So the other part of structuring your business for tax compliance and growth is setting up financial systems early. Financial systems are pretty simple and they don't always have to be complicated. At times it's just a matter of getting a system that helps you keep your sales. Because I don't know if you saw this, but a few years ago, or rather two, even it's still going on, there were these posts where people were showing like a letter from KRA where guys were being asked for sales records for the last 5 years. So it's something that KRA can do today where they do an analysis and they can ask you for all your sales record for the last 5 years. So if you don't have a good system today that can basically generate all this at once, you leave yourself the exposure of KRA doing their own assessment and going like, these are your sales. Like, let's say they'll pick your statements and maybe all the money that's coming into your bank statements or your M-Pesa statement is not sales. But if you have a system that keeps records, even just as basic as sales records, it becomes easier to go like, these are actually my sales records and these are my only sales. So Sales is one part of it, but a good system will help you keep sales. Number two, it will help you record your expenses, which is basically bookkeeping, because bookkeeping is basically keeping track of all business transactions. These are incomes, expenses, loans, everything. And it really separates the revenue and the profits for purposes of tax. Remember what I was saying earlier? Today, if you're earning $1 million, definitely you have some expenses attached to that. But if you don't have proof of those expenses, it can be hard for you to make a case for yourself. Like, actually, these were my expenses. But if you have a system where proper books are actually being done, you can very easily be able to be like, here are my records, and my records can show you, these are my sales, these are my expenses, this is my profit. So I've been saying this is my profit, and you guys are coming and telling me that I need to pay more tax. What is your basis? And they'll always ask you, give us your records. So you see, if you have records that support your claim, then they can't have a case on you. So it's very good to keep your books. So in line with keeping your books, it's good to have a proper accounting software. And I know there are people who say that accounting software is expensive, so they stick to spreadsheets. But how many spreadsheets are you actually going to keep each year in, year out, for you to be able to have records for the 5 years, which is the regulatory standard for you to have sales? So there are tools like Zoho Books or QuickBooks. And I know some might say they're expensive, but the thing is, a software like Zoho Books actually has a free forever version. And the free version of Zoho Books allows you to do your invoicing, allows you to do your bookkeeping, allows even to have like financial reporting without paying a single coin. So from day one, even right now, you can go set up an accounting software system for your business without paying any amount. So I like Zoho Books because if, let's say, you get to some point where you would grow it, because I think it has a limit of 1,000 invoices for the free version, you get to a point where you're doing more than 1,000 invoices, then you're able to upgrade. But you see, by the time you're doing more than 1,000 invoices, it means your business is growing. And again, because you have the accounting system, you're able to see the reports, and it gives you a history of your business. So even as you're making plans of where you want to go and where you've been and what you need to change, you already have a good analysis because you're keeping all your records in the business. So these tools can help you manage invoicing. So you don't have to change, like, let's say, the number every time you're doing an invoicing because you're using an Excel template or a, what is it called? Word template. I even forget because I don't understand why people use templates, but anyway, and receipts. And you can also automate tax calculations. So if you've been keeping your books for all of last year, let's say because we're in tax season right now, then when you're getting that guy who files your taxes and they're like, we need your records, you won't start scrambling and start finding your bank statements and your M-Pesa statements for your business to start trying to remember what was happening. You're already keeping your records. So it becomes just a matter of extracting reports, and because again, if you're keeping books, you need to also be checking your numbers, and you're also checking your tax. Because you see, if you say, okay, I was at a loss Q1, but in Q2, my profit went a bit high, in Q3. So you're also able to do what is called tax planning, because if you're at a loss, you are not expected to pay any tax. But if you are in a position of profitability, then you're expected to pay tax. And you're not paying tax monthly. You can pay tax at the end of the year, or you have the option of planning for it and paying for it every quarter, tax planning. So away from that, you can also go to payroll systems. Like, let's say if you have employees today, you get a good system that helps you keep track of your payroll, the tax obligations, tax and statutory obligations that go into it. And these are actually some of those expenses that are allowed for you to reduce your business in revenue to help in taxes. So businesses with employees can set up a structured payroll to manage pay tax deductions and ensure employees are also paid on time, because pay your employees on time, keep your employees happy, because they are also part of the lifeline of your business. The other way you can structure your business for tax compliance is what I was talking about, where you proactively you do proactive tax planning for long-term growth. You can be able to, let's say, what is it called? Approximate. So again, good part of keeping books. You look at last year and you see last year you were in a profit position when you check your reports. So coming to this year, you know, because you're planning to grow your business, you're not planning to be like, oh, last year my year was so good, I want to go backwards. Because you're putting in your forecast and everything, so you know that you want your business to grow, you're able to do tax planning based on last year's records. It's called installment tax payment, where you make your payment of tax in quarters. So in Q1, you pay, in Q2, you pay, in Q3, you pay. And the good thing is, if let's say you pay tax based on last year's numbers, and then we get to next year and the business did not actually perform as good as you thought it would because of one factor or another, you know, last year we had maandamano and it affected so many businesses, then you are actually able to get that back as a refund. And this is one of those monies that you pay to KRA that you're actually able to get your refund back. So you're able to plan for taxes and then ensure that you're taking full advantage of available deductions, as those can, like those on depreciation, which is what I was talking about, like either motor vehicle or maybe some other equipment, like let's say in the manufacturing space. And these things, of course, they have wear and tear because they're being used. So office expenses, if you do like charitable donations, maybe like your farm has this quarterly or half yearly thing where you go to a children's home or something of the sort, that donation can be used to reduce your tax liability. So the other thing becomes registering for tax obligations the right time. VAT is one of those things that I know in the past, I hope people are not doing it anymore, where I used to hear someone registered for VAT because they were told you look like a serious business when you registered for VAT, which is crazy to me. But anyway, I understood because again, there are a lot of people who don't have the right information of tax. And those few people who have information of tax, even if it's wrong, they are very confident when they're telling people about it. So you got that in misinformation and you registered for VAT. But when you're registering for VAT, no one told you that whether you actually get that business or not, you have to file VAT every month. Otherwise, you're getting a penalty of 10,000 every month without fail. So you need to ensure timely registration of taxes. So the thing with VAT is, if your business is not at the 5 million threshold, you do not need to register for VAT. So they always say you register for VAT if your business is at the 5 million threshold. Maybe they should make it 10. That's why I'm talking about 10. At the 5 million, or you're anticipating for it to be at the 5 million. I honestly advise, don't anticipate. Don't stress yourself like that, honestly. Wait for you to actually get to the 5 million. And then after you get to the 5 million, then you can start thinking about registering for VAT. Because know that the moment you register for VAT, you're expected to file without fail and pay without fail. Anytime you miss a filing, you get 10K penalty. Anytime you miss a payment, there's a percentage charged. So be very careful with that and ensure if it's VAT, you're registering at the right time. Same as pay as you earn, which is payee. This is when you have employees. So if today you're starting your business, like if you go to register a company, they always ask you if you're planning to have one or more employees. I always say no, because it gives you time to be ready for that, because you can always just come and tell them, I actually have employees now, give me the pay obligation. Because the moment you say yes, when you're registering the company, and let's say you haven't even started the business, you're going to be expected to be filing the pay as you earn return every month without fail. And if you fail to file that, you get another penalty of 10,000. So unless you actually have employees on contract, permanent employees, don't rush to register for pay as you earn. But on the flip side of it, hence the timely registration, if you end up having employees for a while and you've not registered for VAT for payee, they can actually charge you for those months. So with pay as you earn, you need to be very careful because it's one of those few tax obligations where they have the option of backdating. So like things like VAT, they kind of don't have a way of backdating. Like they can't come and tell you, you need to pay us VAT from, like, let's say last year in June, if you're not registered for VAT. But with pay as you earn, I'm telling you, you can even be asked to pay as you earn from like 5 years ago or 6 years ago. So you need to be very careful about that. If you meet the threshold, make sure you get that. But with corporate income tax, which is now the June returns that people talk about, and it's not always June, by the way, it's a matter of 12 months where the 12-month period ends. I think the focus on the June is normally because of the budget, and for individuals, it's automatically a June deadline. For business, it can be any time 12 months end. So if you register your business today, we're in April, and then you say April is your first month of the year, you will not be expected that your tax deadline is June. Like let's say next year, it will be 12 months, like from where April ends. So maybe your tax period will start in May as opposed to January for most people. So this is one of those ways that you can be able to plan your taxes. Maybe you feel like the January to December thing can be a bit stressful. So when you're registering your business, you can choose a different tax period. But now on the flip side, because everything always has the good and the bad, June is good because it helps everyone remember, because everyone is in that craze. These other tax periods can be confusing and you forget. So when you're choosing that as well, be very careful with that. So we are good till there. Taking notes, questions? Okay, thank you for the thumbs up. So the next part of it becomes the common tax and compliance mistakes that are costing SMEs money. One of them is the obvious ones, like filing late or not filing at all. If you have a PIN, the moment you get a PIN, just know you're expected to file returns. Simple. Whether you have income or not, I know there's this misconception that if, let's say, you started your business and then it didn't make money, then you don't need to file returns. You actually need to file your returns, whether you're making money or not. Hence why they have the option of nil returns. So if you're not filing returns, you're going to have penalties. If you're filing returns late, you're also going to get penalties. So just make sure the moment you become a business owner and have a PIN, or even just you as an individual, make sure you know your tax deadlines. If you're having monthly tax obligations, which is pay VAT, just know pay is like on the 9th, VAT is 20th. That doesn't mean you file 9th and 20th, but anytime from the new month, even on 1st, you can be able to file your returns. This is the case as well with the June returns. Allow me to call them the June returns because that's what people like. You can be able to file your returns anytime from 1st of January. Like the moment the year ends, we've said Happy New Year. Even at 12:01, you can actually be able to file your returns so that you avoid being late and getting that penalty. Number 2 would be failure to keep proper records. If you're not keeping proper records, it's not just bad in terms of the taxes, and I know people like focusing on that. I genuinely believe that good records are good even for you. You need to understand your business history. You need to know where you're going, where you're coming from. Are you meeting your, what is it called? Are you meeting your goals? Are you meeting your targets? And the thing is, sometimes people are making money, like you're having sales every day in, day out, and you're even seeing your sales grow. But when it comes to the end of the month, you find that you never have money, or you're always just in a short. And one of the things that why that happens is because the expenses that you're missing, or the things that you're spending on, that you're failing to record. And so you're always in a rat race, kind of, because there's money in, but there's money going out, but you're not able to identify where the leakages are or what you're missing, or maybe you're underpricing your product. So when you keep proper financial records, you're able to get a good analysis of this. With good books, you're even able to properly analyze every single item. Like if you sell item 1, item 2, item 3, you're able to see, is this profitable, is this not? And that's not from the business owners. I know how business owners always say, oh, I know I'm making money. Najua maybe niko profitable or not. Have experienced so many people who, before you start doing books for them, they're like, oh, I'm definitely profitable. And then you start doing the books and they are shocked how they've never actually been profitable, let alone even breaking even, because there are so many things that get missed. When someone is doing your books, you have to take into consideration everything, every single expense. There's nothing that can go unaccounted for, and that helps you as a business owner and when you're planning for growth. So failure to keep records is not only a tax and compliance mistake, but it's a big mistake for your business because you're basically running a business blind. The other thing is mixing personal and business finances. And this is especially such a big one for those of us who are running a business and it's just us for the first part of it, where there's no one who you have to discuss, like they pull out so it becomes very, very crazy when you start mixing your expenses. So it's very critical to keep these things separate, such that you don't end up like, let's say, it was personal money someone was paying you, you put it into your business. If you're not keeping proper records and carry want to audit that, they'll count that as income, which will mean you end up paying more tax than is necessary. So it's very important to stop mixing your personal and business finances. So with this, let's say for those people who are like, oh, I didn't have time to, or maybe the resources to register a limited company, when you have a business name, you're actually able to register like a bank account specifically for the business, which is allowed to be separate from you. And so you're able to do all your incomes and expenses with a business name. So that can be a good place where you can be able to start before you get that point where now you separate everything completely. So it doesn't have to be all dark and gloom if you don't have a limited company. You can still manage to keep proper records, even with a business name, separate, and keep everything separate. So the other becomes underreporting income or overstating deductions. So currently, KRA is using a lot of sophisticated systems to track business incomes and expenses in so many ways, So any discrepancy in what you report will trigger an audit, leading to fines and possibly even legal action. And one of the things where I see, how there was this story that people now are not using Lipa na M-Pesa anymore, people are not doing banking anymore, so everyone is going the cash way because they think that has less options of trackability and all that. You forget you're buying somewhere or you're getting products somewhere, but one way or another, there's a part where your business is going to do transactions that can be linked or tracked. So it's always just easier. Ensure you have proper records because this will help you with underreporting income or offsetting deductions. So KRA introduced e-teams last year, 2022. Yeah. And the whole point of e-teams was if you're going to come and say today that you have expenses worth $1 million, we don't have a problem with those expenses being $1 million, so long as you can prove that these expenses are actually tax expenses. So it's not that you're being told, you cannot claim things or something of the sort, but if you have proof that they're actually expenses your business incurred, then they don't have a problem with you claiming this. So e-teams came in to help that, so that because people used to create fictitious expenses, like someone will just sit and like, oh, I told KRA through VAT that I did 10 million. They go and create fictitious expenses and deductions of like 5 million, and they were losing a lot of money on that. So to curb that, they changed this, because now if you are caught on that end of it, you're slapped with a heavy fine. And they don't just slap you with what they have calculated themselves, but there's also interest and penalties attached to it. So you need to make sure you're not underreporting your income or overstating your deductions. Again, ties back to proper record keeping and bookkeeping. It will save you in all this because you have a clear picture of everything. You're not trying to think of what your income was from your mind. Your income is just there. So the other part becomes, again, not understanding tax deductions and credit. I can't talk enough about deductions because there are so many things. Like running a business, of course, the expenses. It doesn't matter whether you're a product business or a service business. There are always expenses that you're incurring when running your business. One of the things that people don't think about that can be used as a tax deduction, and especially for businesses that are in the online space, when you run those Facebook ads, you can get a tax invoice for that. Actually, like Meta has provided for you a place for you to put in your KRA PIN and get a tax receipt every month. And this reduces your tax liability, whether you're a VAT registered business or you're not. Because you know how I was telling you guys, you're always paying tax, whether you know it or not. If you ever look at your receipt of adverts, if you do ads online, you will see there's always a tax charge. If they're telling you your minimum is $2, they always tell you before tax. And this applies to so many things. If you're booking an Airbnb today, let's say you had to travel for a conference or something of the sort, they always tell you these are the charges before tax. If you go to bookings, basically all these things, you can be able to get them as tax deductions, so long as you're able to prove that they are business expenses. You have an office, you go to Naivas and shop. That is a business expense, that's a tax expense. Get that receipt as an ETIP receipt, or rather as a tax receipt, so that it reduces your taxes. So if you're understanding tax deductions and credits properly, then it will be very simple for you to comply. And you'll also find you'll not pay a lot of tax, honestly, because you have all these things that were securing you, and they were doing that legally. It's not ile kutafutilia you had to do something or pay someone to give you an invoice. No, you're actually incurring expenses that can reduce your tax obligations, or rather liability. You fuel your car. So the moment you've understood the mistakes, the opportunities, and everything, we can get to the part of strategies to avoid these mistakes that we're talking about. So if you're constantly not filing or late on filing, just ensure you're regularly filing your tax returns on time. How you can do this? You can set up a reminder. So it's the tax deadlines don't change. Pay as you earn. Tax deadline is the 9th of every month. VAT tax deadline is the 20th of every month. Turnover tax, don't like turnover tax, but anyway, it is the 20th. We have withholding tax, 20th. We have rental income tax if you earn from rental income and you're registered. So the rental monthly tax obligation as well, 20th. So these are things, if let's say you're deciding you want to handle these things internally and you don't want to hire maybe a company like a legacy to be doing your taxes, you just need to set up, you know how you do reminders or maybe alarms to wake you up? You can set up a reminder to ensure you're filing your returns on time at any particular point. That be consistent. You know, even if your tax obligations are minimal, always file on time to build a track record of compliance. Because if you're doing all these things nicely, if today you get a big contract and they're like, we need a tax compliance from you, you will start running around. You will know, one, you either have a valid tax compliance, or two, you can get a valid tax compliance without having to pay someone or something of the sort, because you've been ensuring, you remember the 2 habits we were talking about, you've been doing everything right the entire time. So the other part becomes utilize accounting tools and software. Automated tax calculations. So let's say ETIMs, because you know ETIMs means you have to give people an ETIM, a tax receipt every time. We have solutions like Zoho Books, especially for VAT registered business, where you don't need to have like an accounting system or an invoicing system and then go and use ETIMs again to do a tax receipt. Zoho Books allows you to give your customer a tax receipt directly from the system. So the moment you mekubaliana na client, this is the amount they've paid, maybe the deposit, you're able to automatically send them a tax receipt. And you see, because you're doing that from the system, you automatically know what your tax due are. So it's also automated calculations. And then are you able to see, again, when you get to the VAT threshold, you're able to know, and yeah, we are now at the threshold. I'm not like approximating it or anticipating it. Your books and your reports from your accounting tools and software are actually showing you this. And again, it helps you with the income tax, because if you're looking at your numbers, then you know, hey, next year, by the way, I'm paying tax. So you're able to pay your tax on time and be compliant. Efficient record keeping software allows you to store receipts digitally. And this is not just a matter of the receipt that you keyed in. Accounting software like Zoho Books allows you to actually take a screenshot of your receipt and upload it on the system. So even if you lose receipt, or rather the way receipts fade, you still have all your records with you on the accounting system. Strategy number 3, separate personal and business accounts. Separate them. You know, there should not be a point where you're paying rent from your business. That's your home rent. If you're paying rent, or maybe you're going out with the boys or the girls and then you're charging it on the company, don't do that. One of the things I see people doing is those people who say, oh, I don't pay myself because the company cannot afford to pay me, but you're constantly pulling money from the business for your personal needs. So instead of doing that, just set for yourself a salary and have discipline with it. And then the good thing is, you see, the salary you're setting for yourself as a business owner, as much as, let's say today it won't be a lot because you understand where your business is, it gives you discipline and also a different kind of motivation, because if you want your company to pay you $500,000 in the next 3 months, you know you need to work hard for it. You know you need to track your sales. You know it's a process. So it's also very good for you to separate your personal and business transactions for growth, because now you're like, hey, anyway, I only get 50,000 from my business because it's what it can afford me now, but I genuinely need my company to be paying me 150 or 200 because my company is my entire source of income. So very good for your business as well and for your growth. Keep accurate records of all transactions. Audit trails. So basically, audit trails, as in the name of the trail, is, you know how I was saying, at times you'll find yourself, you're doing sales every month, or your sales are increasing, but you're also finding yourself, you're still broke. Hauna pesa. And it's not a matter of someone not paying or delayed payments, but it's because there are those two tiny expenses that you keep missing when you don't do proper books. When you do books, you're able to have audit trails and you're able to track every single expense. So it will help you, you know. And if you don't have like the patience for that, because honestly, it's a lot sometimes, you can always hire someone or outsource someone, or you keep the main records, you know, like maybe just the sales or the big invoices, and then you have someone come in once a month and do the review for you and put in the other two small expenses for you and do what is called reconciliation. So the idea behind reconciliation is always to make sure your books in a system or in a software are reflecting exactly what is in, like, let's say your bank balance or M-Pesa balance or cash box. The idea of cash gives me anxiety, but let's say you have a cash box that you maintain where you put like 10,000 every month or every week because of the petty cash transactions. Reconciliation, or rather proper accounting, ensures you do not miss a single coin because everything has to be accounted for. Hence the audit trails. We track every single thing, and that's our work. So we don't get tired of it or say that's insignificant. There's not a single coin in this world that's insignificant. Remember, if you have 999 and you don't have 1 shilling, you're not a millionaire. So we track every single coin. So the other thing would be just work with a tax advisor or consultant, because a professional tax consultant can help you structure your business to minimize taxes, ensure compliance, and navigate tax laws. So a tax advisor can also help you plan future taxes, because, you know, if we're looking at the numbers, then we're able to see where are we and at what particular point do we need to start paying for taxes. And then with that in mind, we're able to look at how does your cash flow look like. If this is your cash flow, how do we ensure we are being able to pay our taxes, pay our employees, meet our obligations, restock, while at the same time be good with KRA, because you cannot ignore KRA. Do you know how crazy KRA is? KRA today can stop you from growing your business, from expanding, from making, like, opening that next shop. If they come and say, we need this from you, and you didn't have the proper, like, measures in place to take care of that. So what are the untapped opportunities in tax compliance? I think you can tell I have repeated tax deductions a lot, because you need to take advantage of tax deductions. It's in the obvious things. You pay for postpay today, there's tax to it. You pay for internet today, there's tax to it. You go to fuel today, there's tax to it. You know, you pay, again, go to a restaurant, travel, when you're buying, when you're importing stuff, there's tax. And all these things are things that will reduce your tax liability. You always want to reduce your tax liability because you want to keep the maximum profit. You pay tax on 30% of your profits. So if today, let's say your expenses are, your income is $1 million and your expenses are 800K, imagine if you could be able to pandisha your expenses to be more, so that instead of paying tax on 200,000, you're paying tax on 50,000. I will take that any day. You know, I will take paying 15,000 in tax over 60K any day. So you need to ensure you're getting all tax deductions possible. Be keen of every single expense that you incur as a business, you know, every single one of them. Make sure you're getting a tax receipt. Go to Naivas, tell them to give you an ETIMS receipt. They'll actually give you, it's not a whole thing, you know. Go to Java, tell them you want it as a tax receipt. You just need to have your PIN, you know, and it's not complicated. You know, the way you know your ID number off the top of your head. The moment you give your PIN number a lot of times, then it becomes easier and you'll always remember it. So let's say today, you know, many SMEs don't take advantage of deductions related to the cost of doing business. For example, if you purchase a vehicle for business purposes, the cost of that vehicle can actually be depreciated over several years, lowering your taxable income. And then now, every single expense that you incur with that vehicle, remember to have it expensed and reduce your tax liability. You go to the MEC, make sure they give you a tax receipt. And they actually give you a tax receipt, because I know I work with a garage and they're always telling me to send ETIMS receipt to people. So you just need to be vigilant on your end of it. The other opportunities would be the tax amnesty program as well. You know, take advantage. You know, if you have not filed your returns in the last 3 years, in the last 5 years, the only thing is amnesty is only covering up to December 2023. So make sure that if you had penalties from that time, if you had not filed your returns from that time, if 2020 likukanganya hadi you didn't get to do your taxes after that, please go update your tax returns and you'll get amnesty, so that you don't get any more penalties or monies that you have to pay. As well, if let's say there was a time people used to get a lot of erroneous obligations, like you went to a cyber and they registered VAT for you accidentally, amnesty presents an opportunity for you as well to clear your tax obligations, because you go tell them this was wrong. So that 480,000 that has accrued over the last 4 or 5 years, they're able to clear it and you have that obligation removed, so that you don't have to live with it anymore. So always take advantage. Tax deductions and then tax amnesty. Though amnesty is just for a short period of time, you still have time to take advantage of that. Finally, you just have to remember, tax compliance isn't about avoiding penalties. It's a foundation for growth. And then if you build a solid tax foundation early on, it allows your business to scale. There's nothing that will hinder you in the future. Take advantage of resources like tax incentives, credits, and amnesty program, and always consult with a tax advisor to structure your business for tax efficiency and long-term growth. And with that, I am done. I hope I didn't talk too much. Hope you are listening. I still have you guys here, and we can get to the fun part where you people talk to me. And